Welcome to This Week in the Mortgage World. I am here with Rich Hanlin, president of Xpert Home Lending. Rich is in charge of what, Rich? 50-some loan officers?
575 loan officers right now, today, as of 5 minutes ago.
Well, it's been a crazy year, I think, with all the changes happening in the housing and mortgage markets. How do you see things evolving moving forward, and what is Xpert doing to kind of stay ahead of the curve?
Well, that's a great question, Tim. I grabbed this crystal ball, or I have that thing, the old 8-ball, where you shake it and you ask a question, and sometimes
I actually have one in here.
Sometimes I think that gives better information because it's been crazy the last 3 years. We get a lot of conflicting information, like jobs reports. They report one way and at midnight they revise them. And so in the mortgage industry, we're hearing that they need to drop the rates, but at the same point, we're hearing that they don't have control over the mortgage rates because no one's buying our bonds. So which direction do you want me to go where I think it's going to go? I'll tell you what, this is what I think is going to happen because it's already happening. Whether I like it or not, the state of Texas is giving away houses on a firestorm. Whether I like it or not, the state of Florida just got hammered yet again with another hurricane, and people's insurances aren't paying off. Whether I like it or not, insurance is becoming a new obstacle for home ownership and or retaining homes. Pick California, pick Northern California. We got carriers pulling out. We have a lot of scenarios. Let's add in, Tim, factual information. We're pretty much at the same mortgage delinquencies we were to the 2008 crash. Don't hear about that in mainstream media.
Interesting.
We are at a record high in delinquencies in both personal credit cards and car loans. You don't really hear about that. You got to go dig that up. In other words, people are on the verge of something needing to happen, and this is what I think is going to go down. I hate it, but somebody's hardship is going to be somebody's blessing. If you do purchases as a loan officer, if you don't, you're out of your mind because refinances are rate driven. And if the rates aren't low enough, people ain't coming off them low rates. They're just going to keep accumulating personal credit, personal debt, and they don't care if they get behind because they're going to protect. And I'll add in one caveat to there, and whether people want to hear this or not, you hold on to that low rate as long as you can, but if you have to file bankruptcy and you have a lot of equity in your house, you don't get to just walk away. You're going to have to either tap into that equity or you're going to get stuck with a repayment plan. So people will be coming off those low rates one way or another. Unfortunately, a lot of places are real estate rich, cash poor. Welcome to California. People use personal debt when they're not using their house as an ATM machine. We see how that's working. We got record debt, and guess what? People's incomes have been structured in a way that they are either losing jobs right now. We have an economy pulling back. It's getting tight. They don't have the money. So where are they letting the payments go? They're going to still feed the kids. They're going to make their first mortgage payment in most situations. They're going to let the cars start getting behind. They're going to let the credit cards get behind. It's going to get good out there.
You talked about 2008. Gosh, I hope we're not there. But I think what's different. It's different this time around because there seems to be a suppression of the information. And I'm not sure if that's strategic or if we just learned our lesson. We're not looking at it. What's going on? Why are we not aware of these figures you just brought up about the delinquencies? How is it different this time?
One of the things I think our government has gotten to a point that they think they know what's best for their constituents and their voters, that they suppress information because they're not out to frighten and or have people fight back. I don't know what the right word be, but when a government who's voted by the people suppresses information and you learn that they've done that, who's that to protect? Because most of the people in our industry, realtors included, we want the information so that we can make the best choices for us, including our personal lives and our families. They are dismissing our ability to make that personal decision for ourselves. I'm not trying to get political. It's on both sides. But that's what I see. And we're told we're stupid. We're told, oh, you're a conspiracy theorist. What do you mean that what we have like 2 quarters ago, the jobs that were created, they're all government jobs. What good does that do the United States of America? Hey, but look at all these jobs. They were all government jobs, not in the free world. So I think there's a suppression of information, and unless you're willing to go dig through it, your mainstream media is going to give you the narrative that they want the masses to have, so that you'll wake up every morning, get on the freeway, go through traffic to get to work so that you'll pay your property taxes. Let me throw another thing in here, Tim. What, 80 to 85% of a county, their income is derived through property taxes.
You said 80%?
Yeah, something like 80 to 85% of each county, their budgets are derived through property taxes. So what happens when people don't make their payments? They also, including in their payments, is the part that goes to property taxes. So we're going to start seeing these counties. If you ever wanted to get into tax liens, this would be the year to do it. Because you're going to be, and there's a lot of courses out there. I've been studying it because I'm amazed. They need that money so bad, they're willing to pay sometimes double digit to 20% in interest if you will take on that tax, pay it, and then they'll collect it back later, to the point that if it gets too far behind, you get the property.
Wait, let's talk
hold on.
about, okay, go ahead.
I want you to remember something.
Okay.
I don't care how many mortgages you got on your house. When it says first position, government's in front of that. They always get paid first on a foreclosure, on a sell, anything that's backdated, the government gets paid first. So those tax liens, if you're not paying your property taxes and you go sell the property, that lien takes precedence over the first mortgage. And the lenders know that. So if you got a lot of equity, guess who's showing up at the courthouse to buy that?
Let's jump into interest rates. Coming off of our 3-year run of not so great interest rates, nobody's got a crystal ball, but what are your thoughts on the market, on interest rates, on what we can expect in 2025?
Well, what happened the last time they lowered the rates? That the feds lowered the prime rate, right? Is that what the short-term rate? Everybody immediately thinks that the mortgage rates are going to come down. And over time, normally as they get in control, they do start to take on a look as if they're controlled by the same mechanism. But the 10-year bond is based on other governments buying huge amounts of our debt or bonds in return for a later guaranteed, because the United States will never, ever file bankruptcy. They'll just print more money. And that's Biden's advisor that said that when someone said, well, what happens if we'll never bankrupt? We'll just print more money. Boy, I wish I could do that. So what does that do for interest rates? Unless we start getting other countries who are talking about going on their own economic mechanisms, like the BRICS nations, China, Russia, India, if they're not going to buy our debt, then we're going to have to keep raising the bonds to entice somebody to buy our debt. So if you ever want to buy a U.S. Treasury bond, this might be one of those times. So in the short term, I think rates are going to continue to hold and or stay up until we see a leveling out or a comfort in the United States government where other countries are willing to come back in and buy our debt in masses. I'm not talking a couple $1,000s. They buy 50 billion at a time. It has to be enough to move the needle. I think short-term rates, they could drop them to zero tomorrow, and that's great for anything attached to the prime rate, right?
Yeah, short-term is overnight trading. That's what banks make off of each other at night. Now,
there's some things attached to that, but it ain't the mortgage
for sure. One thing about the bond market I want to add, and I think you brought it up, it's a good point, is how can we make bonds make these global investors want more of our bonds? And the biggest factor I think that's keeping the bond market from attracting people from buying them is inflation, right?
Mm-hmm.
You're talking about a bond that is supposed to be fixed, it's stable, it's consistent. Well, if I'm an investor and I'm going to take $100 million into our bond market and inflation is showing me a steady increase or even not a decrease, inflation eats profits for those who invest in the bond market. So right away, we have to address that, because I think that is probably the primary reading that investors are looking at. And the problem, Rich, I have, and maybe you've seen this, is the CPI and the PCE and the PPI and these reports are telling us how inflation's doing, and they're not maybe that accurate. So here we have potentially inaccurate reports telling investors about inflation, keeping inflation from buying bonds and keeping rates where they are. That's what I'm seeing. And that's a struggle. And I put this on my podcast and I talk about this all the time. I feel like the data hasn't been consistent. And so we're making decisions off of inaccurate data, and that's a struggle. Rates are going to probably hold until we transition the new administration and clear out the clunky data that we're getting from the current BLS persons that are running that program, as well as the other ones.
I don't think that these other countries buy our treasury bills, which is basically U.S. debt with a guarantee. I don't think they buy it for profit. I think they buy it as insurance policies. If they can make a little bit of money, great. But that's where the inflation being higher. In some of these other countries, inflation is worse right now than what it is in the United States. I mean, the UK is having incredible inflation. The world since COVID has, am I allowed to say that? The world since the great virus of 2020 and 21 has seen a lot of, the pain we have in the United States is not just in the United States, across the whole world. And people have always invested. Well, then we started doing sanctions and things like that, and then they got fed up with us. So there's a combination of things. I'm hoping the new administration could ease, because he has said, hey, if you take us off the US dollar as the world currency, we're going to have some tariffs. So there's a lot of tariff talk. We'll see how that all starts to come. Different negotiator, different administration. Maybe it works good. Maybe it gets worse. I can't tell you that. All I know is it takes a lot of bonds to move the 10-year treasury bond in a direction that rates start to go down. Tim, let's be honest. We're not going to see 2.5%, 3%, 4% rates. That hurt us to have rates that low, right? A rate in the fives, if you're putting your hard-earned money up, you don't want 2% return, even if it's a guarantee. When there's other investments out there, when you can get more on a bond than you can on the housing market, and it's guaranteed by the government versus a foreclosure. I mean, there's so many things come into play when the rates get lower and lower and lower.
But I do think there's a middle ground here. When you look at the people that, I don't know about you, but I think a lot of the people that we closed loans for last year and the year before, a lot of those people are sitting in the low sevens, mid sevens. I mean, I think there was a couple in the upper sevens at one point. There will be opportunities for refinances this year. Now, like you said, it's not going to be a 3% rate. It's going to be maybe, and I could be wrong here, but we should be able to refinance some people next year. We should have opportunities. But I think you're right. I think the expectation is, look, we're done with 2%. That's probably not going to happen unless North Korea does something crazy and totally destroys the global economy. But I think
world wars and things like that, those are unknown.
Right. But I think the key, though, as far as our loan officer business goes, is like, look, if you can lower somebody from 7 to 5.5 or even 6, maybe, could that save a person $300, $400, $500 a month? I mean, that's, I think, the realistic refinance that we're looking at maybe for 2025, because there was a point there where 2025 was going to be the year of the rate cut. And this was 3 months ago. The Fed and everybody was pretty gung-ho about 4 rate cuts in 2025. We don't know if that still exists. That may be off the table. What are your thoughts on that?
I think the Fed you have to remember, all the data is in arrears, right? And then they have to guess going forward, and you're moving the Titanic. You're trying to turn the Titanic. I remember my brother's in the Navy, and we were talking about aircraft carriers. They're damn near a quarter mile long, and it takes an hour if you have to turn and go back. So if someone falls overboard, they don't turn around and go back. They disperse a boat. The energy, time, and money to turn that size of a boat. Well, the economy is every bit of that. The Titanic, you're going to keep plowing through, and you're going to send off these little helpers to try and bring things in, because it takes a long time to move that clock hand and bring it around the other direction. I want you to remember, I was just updating somebody. 4.49% was May of 2022 was a rate I gave them on a purchase transaction. That wasn't that long ago. And now we're talking today. I can't touch that, but guess what? She's real estate rich, cash poor, lives in California. She's accumulated $80,000 worth of debt, and she took on a car payment with $849 payment. Can I save her money at 6.5, 6.75? I can. I have these conversations all the time. People tend to compartmentalize. God, say that fast a few times. They box all their debt into these boxes, and they say, man, I have people that are paying more on their credit card and their cars than what their house payment is. And they feel like they're getting ahead. And so Matt Ispia, UWM, talked about it. It's time to start teaching people what a blended rate is, because that's your
Right.
true cost per month, is your total living. I have people spend $2,000 a month on eating out, food, Starbucks, and they wonder why they can't make their house payment. It's so tight. And I'm like, we've become a nation of, oh, I'm hungry, I'm going to get food now. I'm not going to make it. How many people do you know eat at home 7 days a week, 6 days? When I was growing up, we ate at home pretty much, except for Fridays where we could get a deal on pizza and we'd order pizza either in or go there. My mom made dinner every night. Our budget was the grocery budget. We didn't pay $2,000 a month eating out 3 meals a day, starting with Starbucks. I have friends that they go through the Starbucks line every morning taking their kids to school, and they hit it on the way home. And you're talking the husband, the wife, the kids. I have kids that are in college that don't work while they're in college. The parents are just paying the whole amount. I mean, it's different than when I grew up. I'm not saying there's anything wrong with that. Do what you want, but it takes a toll.
Keyword is budget, and also be realistic about that interest rate. Yeah, it's really cool to be sitting on a 3% rate, but if you're swimming in debt, don't get stuck, as my friend Aaron would say, don't get stuck polishing brass on the Titanic. Right. So real quick, want to jump to one more topic here. This is on everybody's mind, and I'm just going to say it. It's the C
Well, Tim,
word.
can I say one thing?
Sure.
Just one thing, because you talked about budgeting. So at any given time, I go back 3 months of completed bank statements and credit card statements, because I want to see where every dime of my money goes. And I have food, I have supplies, I can put it into the right bracket, so I know where my money's going. That is up to date, and it's a 3-month running average, and I can see where I'm overspending in areas. And food
Yeah.
is always a huge one on there, because my wife and I eat out a lot because we're at a point where we don't have kids. We've had to dial that back because we're like, no, we're not going to spend that kind of money. I challenge people to do that. It's hard because you get to see things. But go ahead.
The reality is, Rich, is if you don't know where the money's going, who the hell does? I mean, what you're saying is
people don't balance their checkbooks anymore, Tim.
And it's uncomfortable too, because it's almost easier to not know, right? It's easier to not even look at it. Just like a health exam. I don't want to know if I'm sick. I'd rather just die one day. Like this is a totally black conversation, but that's kind of the way people look at debt, is like, I don't want to know. Let's just go to dinner, put it on this plastic thing, and
give it in, and
because I don't have to pay for it. Right. Next topic here, which is also on everybody's mind. It's the big C word. And, coming off of the last few years, Rich, almost compliance. Let's talk about compliance. And, there's a lot of changes, and that's an ever spinning ball. And when you grow as fast as Xpert Home Lending has, I don't know how you can possibly prepare, unless you knew you were going to grow at 800% or whatever percent that is. But talk to me about compliance in your company, as well as the general, what you're hearing in the circles of the other companies that you talk with.
Well, that's a great question, because you're asking me these questions and I don't know what you're going to ask me. So I'm going to give you the real answer that I've come to my breaking point as an individual. At about 100 loan officers, we brought on One Rose Compliance to help us with that. They have run their course because we're one of 100 lenders that they do, even though we might be one of their biggest accounts. But we, as of December 1st, just so you know, Tim, I have no problem putting it out there, we have finally hired an in-house, full-time, expert-only compliance attorney that has 35 years experience with multiple companies. And the tip of the iceberg was he was the head of compliance for USAA Insurance Mortgage. If you know anything about USAA, they only take the best of the best. So we went out under expert quality and we found what we thought was one of the best of the best. Does he talk like a compliance guy? Absolutely. Does he talk like an attorney? Absolutely. But guess what? That's what the auditors now want. If you're going to get big, they don't want the broker being the compliance person, being the janitor, being the loan officer, being the real estate agent. They don't believe that you're capable of doing that. And at one time I probably was, but I'm not anymore, Tim. 40% of my time was spent on compliance, and that's just working with One Rose. We're now bringing somebody in who's rewriting all of our guidelines to make them our guidelines. We're not just buying these pre-printed things. We're going to be introducing them to the company. His name is Michael. Some people are already interacting. He's already jumping into our audits. We have audits all the time. You got to understand, 44 states, there's usually 2 going at a time. They last for sometimes 6 months just because the auditors are very backed up. You send information, you kind of go back and forth. It's not like a 2-week thing. I have auditors coming into the office. That's part of it too. It takes a lot of time, and it's become 40% of what I do. So I was really happy when we decided to make that change and bring somebody inside. All the bigger companies that are much further ahead of us have their own internal compliance. They're not using third parties. You have to. It's by design that you have to grow. And that's one of the things of growing, is taking on more overhead and making less money as an owner, because it's more important that I stick to my lane of what I do best. And my job is not to do compliance. My job is to help my loan officer figure out how to get one more loan. My job is to help them, their realtors, close deals on time, is to find the holes, to find the breaking points, to help them stay positive. You and I, we entered into trying to help people through social media. I have bigger plans that I could be better utilized in. And now we have a professional compliance person that is part of the Xpert team. And that's what we guaranteed our people, is that we would bring you the best because you trust us to make sure that we're getting it done right. That'd be my answer to that.
Right. We get emails from you, Rich. By the way, when I say we, I work for Xpert. I'm affiliated with you.
You do?
And fun fact, you talked about your breaking point at 100. I was loan officer number 99.
I knew that was coming.
So anyway, it was pretty much the apex of greatness for the company, I think, at loan officer number 99. But in all seriousness, Rich, I appreciate your time today, and thank you for giving us some insight on the market. I think it's going to be interesting.
I think we should do this more often. I think these random questions that I can't prep, you're just going to get the off the cuff, the best that I know with my knowledge based on the people I'm speaking with. And I think that goes further than having all these planned out things. Tim, can I give a shout out? I want to give one shout out.
Absolutely.
I have a friend of 33 years. I played professional baseball with him. I played college baseball with him. I'm not going to give his name because I don't want, it's for him to let the world know. But he called me this morning and we had a great talk. I'm 3 hours ahead of him. And he said, Rich, I think today's my last day. I just wanted to give it to you. He works for Xpert. He's going to hang it up. He's just done his 33 years. And I was so proud of him because you had to understand, he also has other businesses. He has done well for himself, investing in real estate, things like that. And he just said, you know what? I'm to the point that I want to be able to take more vacations. I want to have a little more time for me. And I feel like I've been in the service industry forever. Tim, there's a reality in this for all of us. And we are going to come to that point. And I want to remind everybody, I didn't talk him out of it. I thanked him for his friendship, number one, but number two, he mentors me. He's one of those people I go to and talk to. We've had an incredible relationship, and a shout out to him, but I want to tell everybody, your job is not just to help people get into houses, it's also to make sure you're setting up your life for after this business. We're not all working until 99 years old like Dorita Ivy. I just had to do that to give her a hard time. But we are making people millionaires and quadrillionaires all day long with investments. We have all the great products. I have people making incredible money. Please make sure that you're also securing your future, your family's future, where you want to be, those secondary, third, and fourth income sources, so that you can fly through and truly be a professional. It makes you that much stronger when you have conversations because you yourself are doing the same things that you're helping others do. I just wanted to put that shameless plug in there because I'm just honored with some of the people that I know.
Thanks for joining us today, Rich.
Please make sure you keep the Christmas tree in the background.
I will. That's a real tree too, believe it or not.
It looks like it, Charlie Brown.
Thank you. We'll talk soon.
All right. Thanks, Tim.
Thanks, Rich.